Only a handful of session left for 2016. That means we'll be kicking off 2017 in the upcoming trading week. Joining me now is Peter Cardillo of First Standard Financial. Peter, great to have you here today.
Good to be back.
Well, we only have a few more trading sessions left for this year. We had plenty of event risk and a lot of headwinds. So heading into the new year, what are the key things you're paying attention to in terms of the markets?
Well, I think for one, obviously, corporate earnings, probably even more importantly, is the Federal Reserve and what they're going to do. So if expectations are for 3 rate hikes, then I think we can see the market basically act well. And of course, we need to see corporate earnings continue to do well, because otherwise we're going to have a valuation problem. Now, I am expecting sometime in the first quarter of a pullback, possibly about 8%, but then after that, I think, we're off to the races again.
And Peter, you just mentioned Trump. We will be getting a new president in the White House come January. And that means there are a lot of concerns as well as expectations for what will happen in terms of policy. And we know that some of the policies, if they did go into effect, it would take months, if not years, for some changes to take into effect. So how should investors position themselves?
Well, I think investors should be long this market because, as I said, Mr. Trump's economic plan is certainly pro-growth. No one can deny that. Now, does that come without perhaps maybe geopolitical concerns? Absolutely not. I think that's, again, one of the greatest fears that we have for next year. But by and large, if you look at his administration, he certainly has picked a lot of guys from Wall Street. So I don't think, the market is headed for trouble in terms of perhaps the Trump administration. But again, lower taxes, can't beat that.
And Peter, we can't ignore our neighbors across the Atlantic. Now, we have a lot of headwinds as well as event risk coming out from the Eurozone. We do have elections coming up from certain countries, and we do have ECB monetary policy and expectations. So how are you factoring in those expectations for 2017?
Well, I think, Europe will continue to grow, but perhaps not at a pace that we would like it to grow at. We'll probably see growth somewhere between 1.5%, 1.75%, modest growth. Unfortunately, again, the biggest problem that the European Union continues to face is internal squabbling. And of course, there are certain countries that could present a problem for the EU. And we'll probably have new elections in Italy next year. It'll be quite interesting to see whether or not the five-star leadership is elected. If that's the case, there could be a lot of grumblings about Italy pulling out of the EU.
And of course, we can't end this discussion looking ahead to 2017 without a look at commodities as well as the U.S. currency. Now, it has been a strong year for the U.S. dollar, and we've seen mixed trading for oil as well as gold. But what's your outlook?
Well, I'm very positive on oil. As you know, I think we're probably going to see an average price of $60, $65 in 2017. I think that the latest OPEC agreement will hold. The fact that non-OPEC members have now joined, I think they all need for it to work, because they all have financial problems of their own. So I'm bullish on oil. And as far as the dollar is concerned, going into the new year, I think the first quarter we'll see the dollar remain strong. I think we could see the dollar index tick as high as 105. After that, then I think we see a pullback. We see a pullback because I think the Trump tax cuts, if they are elected, then I think again there'll be a deficit problem, and that could take some of the steam out of the dollar.
Well, Peter, you did call $50 a barrel oil in the aftermath of OPEC, so we'll keep an eye on those levels you just mentioned. So thank you so much for joining me at the end of the year, and have a happy and healthy new year.
Happy New Year to you.